Hello, everybody. Hello, hello, hello. Okay. How is everyone doing out there this evening? Welcome to another episode of Tax Trivia Tuesday. It's a wonderful and great Tuesday. I hope that everybody out there is blessed. For those that are watching this telecast now and those that will watch it in the future, we have a very interesting and very exciting Tax Trivia Tuesday. In which we're going to discuss some different things that's going on in the industry and just ask some basic and general tax trivia questions just to get ourselves familiarized with terms and definitions for the upcoming tax season. So it's about 7:05 now. Give it a couple of more minutes before we get started, and then we're going to go ahead and dive right in. So tax season is ever approaching, and it'll be here before we know it. I'm very, very, very excited. We wrapped up some of our training courses for the first session of classes, and we're looking to onboard a lot more people. I'm pretty sure everybody out there is doing this right now. Like training courses and classes are in full swing and in full effect. We talked last week about marketing. What are you doing to market to your clients or potential clients and put out there continually on social media and different advertising avenues that you are in the tax preparation industry and that you are looking to gain clients. So, you just want to keep yourself visible out there. So, we're going to go ahead and get started on this wonderful Tuesday. And boom, Tax Trivia Tuesday is being brought to you live by Unwrap Success. And this is just a platform in which tax professionals and individuals that have a desire to learn more about the tax industry can come and we can have some fun. So last week we had a really fun time, answered a whole lot of questions, and we're going to move forward from where we left off last week. All right. So this is something that the IRS states, but some people do it, some preparers don't. But this is actually the process of what you should do when this situation happens. So question number 1 for Tax Trivia Tuesday is when the IRS rejects a return that an electronic return originator attempted to e-file for a taxpayer, that ERO must advise the taxpayer of the rejection and provide the taxpayer with would it be a IRS customer service phone number for assistance? Like literally, do they need to call the IRS and see why there's a reject? Would it be B, declaration control number? Would it be C, IRS code section? Would it be D, rejected code accompanied by the explanation? What would these literally be? And Miss Brazil would definitely be right. You give that client the rejected code accompanied by an explanation. For one, that tax client needs to know why they've been rejected and what is the possible solution to getting this rejection resolved, because all in all, everyone's tax return can be accepted. You just got to find out why it's not accepted and correct whatever the issue is, and then resubmit the actual tax return. Ms. Scott also got it right as well. And good evening to everybody that's out there joining us on Tax Trivia Tuesday. We're so glad that you joined us this evening. We're going to move forward to question 2. And a lot of my seasoned tax pros out there have experience with this right here. People come in with all sorts of situations, and you have to know how to handle that situation. And of course, there's always an IRS publication that can handle that if you don't know. So there's always a way to get an answer. So our number 2 question is: a taxpayer goes to a casino and wins $10,000. The casino withholds $500 for federal income taxes. What is the proper treatment by the taxpayer? Like, what do they do? $500 was held out of their winnings. Do they throw a brick through the casino window? All right, so the taxpayer must report the winnings and claim the amount of federal income tax withheld on Form 1040. The taxpayer does not have to report the winnings because the taxpayer did not receive a Form 1099-G from the casino. C, the taxpayer is not required to report the winnings on the taxpayer's Form 1040 unless the taxpayer wants to claim the withholding on the Form 1040. Or D, the taxpayer must report the winnings on the taxpayer's Form 1040, but the taxpayer may not claim the amount of federal income tax withheld unless the taxpayer itemizes deductions. Like, does a taxpayer have the choice to not report it how they want to report it? Like, what options does a taxpayer have? All right. Ms. Brazil says the answer is B. Hold on, I wasn't done yet. Okay. Now, the taxpayer does not have to report the winnings because the taxpayer did not receive a Form 1099-G from the casino. Well, the 1099-G, well, it won't be given to that taxpayer right then. They're going to definitely send those earnings to the IRS. So it's going to be on file with the IRS that person did have some casino winnings. And because there was federal income taxes withheld, the IRS already knows about it. So ultimately, that person must report the winnings and claim the amount of federal income tax withheld on 1040. Okay. I don't know why this thing jumps around like this. It did it early. There we go. Okay. All right. So we're on question number 3. And tonight's segment, we have 10 questions because we want to keep it fun. We want to give out some knowledge, but we want to keep it brief as well so that it's exciting. And then you can get back to your evening and further prepare for the upcoming season, or just prepare for tomorrow. It's literally evening time. All right. Question number 3 for our Tax Trivia Tuesday is the declaration of representative accompanying a power of attorney must sign under penalties of perjury with the representative declaring that A, the taxpayer is aware of the Circular 230 regulations. B, the representative has never been under suspension or disbarment from practice before the Internal Revenue Service. C, the representative is authorized to represent the taxpayer identified in the power of attorney for the matter specified therein. D, the taxpayer is unable to represent him or herself. Now, this question here usually it has to deal with when you're going to represent your client before the IRS in the case of an audit, or just giving the IRS information about this person. And so you're giving them a power of attorney form, which is, if I'm not mistaken, utilizing the 20 form 2848. What is it giving you the ability to do? What are you saying on the penalty of perjury that you're declaring when you send this form in for a client? Oh, let me take this question off. I'm sorry. I'm switching screens here and I didn't realize it was up there. Okay. All right. So someone says, good evening, Ms. Garth. Someone says the taxpayer is unable to represent him or herself. Anybody else? All right, Ms. Moore says it's C. The representative is authorized to represent the taxpayer identified in the power of attorney for the matter specified therein. And that would be, C would be the answer. It would be that the representative is authorized to represent the taxpayer identified in the power of attorney for the matter specified therein. But at the same time, though, the reason why someone is being the power of attorney for a client is definitely because the taxpayer is unable to represent him or herself. That's a for sure. But their representative, they're authorized to represent the taxpayer identified in the power of attorney for the matter specified therein, because on that form it asks what matters are you representing this client for. So that's the answer that they're looking for on that one. Let me go back and see if I can. Okay. All right. For my tax pros out there, a taxpayer paid mortgage interest on $15,827 on another person's home in which the taxpayer had no ownership interest. How much of the interest can that taxpayer deduct? How much can he deduct of that $15,827 that he paid on someone else's home on their mortgage? Is he going to be able to get any of that money back? Can he claim the whole amount since he paid it and it's on their mortgage? He paid it to a mortgage. Can he get it back? Oh, let me take these. I'm sorry. He paid it to a mortgage. Can he get it back? Miss Moore says A. Who all agrees with Miss Moore? I do. I think Miss Broussard said A as well. I believe, honestly, the answer is A. The taxpayer did pay mortgage interest of $15,000, $827 on a, but it was on another person's home. So since he had no ownership interest and it wasn't his own property or her own property, they cannot deduct any of the interest. Okay, some of y'all ready for this upcoming season? Bring it on. All right. Question number 5. Tax Trivia Tuesday. In the current year, the taxpayer paid $5,000 in mortgage interest on a primary residence, $1,500 worth of mortgage interest on a vacation home, and $2,000 in loan interest on recreational vehicle with sleeping, cooking, or toilet facilities. What is the taxpayer's maximum mortgage interest deduction? What is the taxpayer's maximum mortgage interest deduction? Can that taxpayer deduct it all? Can they deduct some? What can they deduct? Miss Williams says it's not his house. Would it be B? Miss Brazil said it's B. Would it indeed be B? Would it be 6,500 because he's claiming what he paid 5,000 on his primary residence and 1,500 on a vacation home? That would equal up to 6,500. But is that the answer? Let's see. The answer would be C, 7,000, meaning he could deduct the $5,000 in mortgage interest on the primary residence and the $2,000 in loan interest on the recreational vehicle, but not the $1,500 mortgage interest on a vacation home. I'm not going to go into explaining that answer because I don't get into tax law. But it's quite obvious they're not gonna allow him to have the deduction of the $1,500 mortgage interest on the vacation home. But they will allow the interest on the loan. So you definitely get your loan interest and the 5,000 on a primary residence. However, the mortgage interest on the vacation home is excluded in this scenario. It was a good tricky question. It really was. When I saw it, I was like, "Oh my goodness, am I even gonna put this on here?" But we gotta be prepared because these people are gonna come in with a lot of new situations. We have to keep in mind that this is the era after so many people got, everything from PPPs to all sorts of types of income. So they might have invested into different things, and a lot of people are going to be out there that have different specific tax situations that this year requires a bit of thinking, a bit of research. So yeah, we got to be geared up for it and ready for them. Oh my goodness. Okay. Now, so question number 8. And look, y'all gonna get this a lot because when the people come in with their W-2s, they're gonna vent to you and rant to you about how much was taken out their checks, even though you do not control any of it. But they are gonna have some issues about it that they are gonna share with you. They're gonna give you a piece of their mind for like why this came out, and you could help them and assist them in this way by explaining to them what it goes towards. All right. So question number 8 is, where does FICA collected from a paycheck go towards? What does it go towards? Like, does it go towards the employees' insurance? Does it go to that specific company's expenses? They take out the FICA so that they can pay expenses and keep the company stocks up, or make sure the doors are open, the lights are on. What is the FICA for? Is it for the Social Security and Medicare programs? Or is it for roads and tolls? Like they repair our roads with the FICA and Medicare because you're a worker and you got to use these roads to get to work. This is what pays for it, because without the roads you can't get to work. Is that what it goes towards? Like, what are we going to tell this client that's coming in and they're upset about so much FICA coming out of their check? Miss Moore says it's C, Social Security and Medicare programs. Miss Brazard also said C. Like, I don't know if the employees really care if it goes to Social Security and Medicare programs so that they can have insurance or retirement, but that is what it's dedicated to go to. Great job, great job, great job. All right. Now, definitely gonna run into this year coming up. Let's see. Mr. Williams said they paying their grandma Medicare and her medicine and her insurance for Medicaid. That's a good way to explain it to them. It goes towards all that as a whole. Ms. Moore says you gotta have something when you retire. That is so true. And us as entrepreneurs got to know that too. So we need to be definitely making sure, like, because a lot of us that are entrepreneurial and in this business, we might not have FICA coming out of our stuff. So we got you got to think about those things later on. Think of, while you're able, what are some ways you can set yourself up also when you get to that age and when you get to that point to where you may need that. And me, I like to generally look into investment opportunities and things like that bring in cash flow and that add value and interest over the years, so that when that day comes, that I have my own source of FICA set up as well. That's something that we should think about as entrepreneurs. Question number 9. We got 2 more questions left, and then we're gonna get off here and enjoy the rest of our evenings. Question number 9 is, what form is used or provided for any person to file for or take the college credit? What form is used or provided for any person to file or take the college credit? Would it be A, Form 1041? Would it be B, Form 1099-College? Would it be C, 1546 College Form? Or D, 1098-T? Let's see. I mean, it sounds like it would be. I'm just saying. It sounds like it would be that 1099 college form. I mean, it has the word college on there. I don't know if I'm just saying it might be that one. Let's see. Let's find out. All right. So Miss Annette says D. Okay, that's weird. 1098-T. That's a weird looking form. I mean, is it? Miss Moore says it's D. Am I outvoted here? Is it not the 1546 college form? Is it not the 1099 college? Is it not the 1099 college? I mean, of course, it is definitely. It's definitely the 1098-T. If somebody come in and bring you a 1546 college form or anything that's not a 1098-T, you should probably I don't know what you're gonna do, but you shouldn't use that form. I know that. They trying to set you up. All right. Question number 10, our last and final question for the evening. And this one here is one that tax customers do come in and ask. They want to know how much does a person have to donate to have to report to the IRS? Like if they're going to donate something and they want to report it to the IRS that they did make a donation or a charitable contribution, what is the amount that they have to at least donate before they can report it? What is that amount? Is it is it $1,000? I donate $1,000, so I'm gonna go ahead and report this. I want to report this $1,000. Now, even though a person does make donations and they want to report it on their tax return, it doesn't necessarily mean that it's gonna make anything change if they don't beat this is just a pop-up question. Somebody can just put it in there. If they don't meet what criteria, does it even matter if their donations go on this on the form? What do they have to meet? What criteria? Yeah, we have the amount for the amount of money they have to report, but what's it called that they have to meet or beat for their donation to have an impact on their tax return? Is it the standard deduction, the itemized deduction? It has to be a certain amount for it to matter on their tax return. But if a person wants to report it, definitely there's an amount. And Miss Annette says it's B, $250. I was thinking maybe, got to be a good old G ball, give a G. No, maybe 100. Give 100. Miss Brazil says it's $250 as well. I mean, is it $250? It's not just, I can't just donate $100 and report that, or G bar with, good $1,000, 250. Are we sure that's it? Let's see. 250 would definitely be the answer. $250, and a person can actually report that donation on their tax return. They definitely can. So for me, you all, this has been fun. It's been filled with some knowledge that preparers or potential preparers will probably watch this later on and gain. So we thank you at Unwrap Success and appreciate your participation in another Tax Trivia Tuesday. We enjoyed. We thank you for checking it out again. We hope you have a very safe week and a blessed upcoming tax preparation season. And we will see you on next Tuesday till we meet again.